Let's talk earnings. Healthy quarter, September quarter for NIIT Technologies this time around. Margins expanding to 14%. Agam Vakil caught up with the Chief Executive Officer, Sudhir Singh, to discuss the highlights of the quarter and started by asking him about the key growth drivers for the quarter and if it is sustainable. Listen in.
We're very pleased with what is an extremely robust set of results that we've declared in quarter two right now. As you noted, we've grown quarter on quarter in constant currency terms 7.6%, quarter on quarter reported terms 10% on the revenue front, and year on year that number is 23.1%. So extremely robust results on the top line, equally robust, equally satisfying results on the bottom line. Our operating profits, as you would have noticed, have gone up 37+% year on year, and they've gone up 25% quarter on quarter. So it's been a materially strong quarter. It's been a very strong order intake that's come in, and it's helped create a very strong platform, we believe, for sustained, predictable, and hopefully accelerating growth here on. So as you said, you're bang on, strong quarter, top line, bottom line, order books, new logos. It follows the trend of the recent quarters where we've been focused on sustained, de-risked, accelerating growth. And the growth this quarter at 7.6% quarter on quarter constant currency came in largely from a clutch of factors that we've talked about in the past as well. One is the caliber of the leadership team that we've built over the past few quarters. All the business heads, all of them operating from the market today at NIIT Technologies, are lateral hires over the past few quarters from tier one firms who have settled down, integrated very well, and are leading from the front. And it's not just a business unit head change. The levels below, client partners, our top three clients, are now shepherded by leaders who have joined us recently, again from tier one firms. And the same thing applies as you look across the organization levels at NIIT Technologies. We've brought in tier one, top tier lateral talent. We've blended it extremely well with the tenured leaders that we've had at NIIT Technologies. That is having a clear impact. The fact that the center of gravity of the leadership is now in the markets has a very clear impact. That's one. The other piece, of course, is strategy. We clearly called out in the earlier quarters that we wanted to specialize and focus on 3 industries alone and operate and transform industries at the intersection of those 3 industries and emerging technologies. The strategy is playing well. And finally, we have very consciously tried to make sure that we bridge the gap between what we say and what we do. So every quarter we've called out our plans. Every quarter our attempt has been, and in the last few quarters you will see this, we have exceeded the plans. And hence, getting back to your question, the results have been sustained. The results are now spiking. And given the order book, given the executable, given the large deal flow, we feel very good about the future.
Right, Mr. Singh, you did speak about a little bit more about the orders. Can you shed more light about the kind of orders that you're signing at this point in time? Also, you spoke about a clear strategy or a way forward for the next quarter as well. In that case, can you also elucidate a little more on the plans that you see when it comes to this quarter? Because I know that a lot of investors are banking on the visibility that NIIT Technologies has at this point in time.
Absolutely, great question again. Order book this quarter has been $160 million US dollars. The order book has increased for the 6th quarter running. Our executable has now climbed to $363 million. In quarter two, we closed 2 large deals, which are greater than $20 million TCV deals. In addition to those 2, we closed 3 $10 million plus deals. So if I look at the pipeline, if I look at the order intake, and if we collectively look at the executables, it's a very strong story that's built up. And looking at that, looking just at those numbers, makes us feel very confident about where the organization is headed and the revenue and the margin trajectory that we can potentially see. That's the first part of your question. The second part of your question was around strategy. Our strategy remains unchanged. We will continue to focus on the 3 industries that we talked about and on their intersection with emerging technologies, core digital included, and drive transformation there. It's a materially differentiated story. It's a story that's playing well in the market. It's a story that is leading to this large deal inflow, order intake inflow accelerating over time. So the strategy stays the same, and the execution underlying that strategy, which in some ways is captured by the hunger that the entire organization, the leadership of the organization has, will also stay unchanged moving forward.
Right, Mr. Singh, if you could also shed some light on how your margins have expanded so substantially. We do understand that to a certain extent, the depreciating rupee against the US dollar will have some part to play, but what are the other factors here which are also leading to this expansion in margins?
So I think it's a great point. Let me just give you the margin expansion story outside the currency depreciation play, because it's a significant story. If I take out currency depreciation and if I talk about margins in constant currency terms, the first half margins of our organization, first half this fiscal year, constant currency, have gone up 180 basis points over the same period last year. So we can take currency out of the equation and the margin has materially got augmented. Now, talking about how we've done this structural change in margins, there are two underlying factors. The first one is, if you actually examine the margin profile of the firm, gross margin has gone up significantly, and the gross margin on a comparable basis has gone up because of very intensive automation, AI injection, and delivery factory restructuring that we've done. Utilization numbers anyway continue to be high, and what we are doing is we've looked at, on a templatized frameworks, almost all productivity metrics and tried to optimize them very aggressively. So that's been one side of the margin play. The other side of the constant currency margin play has really been around the very significant management of SG&A costs. We've held on to our SG&A costs. We have hired very expensive lateral tier 1 talent, as I talked about, in the markets. We have done a very active culling of non-performers, so the absolute dollar SG&A cost has been held. Revenue, of course, is growing up very fast. So interestingly, the SG&A cost in this quarter comes to 17%. 6 quarters back, quarter 1 of last fiscal year, that number was 19.8%. So I would say two things. One, margin structurally has moved up. If I take currency play out, it's still moved up 180 basis points. Two, the delivery factory, productivity improvement initiatives, the entire automation that is being created below that, allied with the structural changes done in SG&A costs, are the two things that have driven this.
All right, that's the management at NIIT Tech talking about the quarter 2 numbers. The stock has seen a strong move on the upside, though petered off a bit from the highs, but still 1186 is where the stock's currently trading at. Rahul, anything in mid-cap IT that